Alright everyone, welcome back to Crypto Brain. Right now, a very unusual tension is quietly building across the crypto market, and even experienced investors are beginning to look increasingly confused because for the first time in years, it feels as though a completely new narrative is slowly forming inside Wall Street itself, and that narrative is directly fueling the Bitcoin versus XRP debate. Across social media, investors are asking one major question. Are institutions no longer interested in simply holding Bitcoin, but instead beginning to aggressively target blockchain utility systems? And that is precisely why theories such as Sell BTC XRP1 are now spreading across the internet like wildfire. What makes this even more fascinating is that this no longer feels like random retail hype. Banks are actively exploring tokenization. Governments are attempting to finalize digital asset regulations. Stablecoins are gradually entering mainstream finance. And Ripple's name repeatedly appears at the center of discussions involving future liquidity systems and cross-border settlement infrastructure. History has consistently shown that the largest market explosions usually begin when the public is still emotionally attached to the previous story, while smart money quietly starts building the next one behind the scenes. And perhaps that is exactly why this discussion could become extremely important for the entire crypto industry moving forward. At the same time, we are witnessing a very strange shift across the market because the crypto world was previously almost entirely Bitcoin-centered. Every conversation revolved around coin ETFs, Bitcoin halvings, Bitcoin dominance, and Bitcoin price predictions. But now the narrative appears to be slowly splitting into two different directions. On one side, Bitcoin continues to be promoted as digital gold and the ultimate store of value asset. But on the other side, institutions are increasingly exploring utility-driven blockchain ecosystems connected to future financial infrastructure. And this is exactly where XRP's name has started appearing far more aggressively in serious institutional discussions. If you observe carefully, Wall Street's focus no longer appears limited to simply holding assets. The focus now seems to be shifting toward moving assets. Financial institutions are beginning to treat speed, low-cost settlement, tokenization, interoperability, and real-time liquidity systems as the foundation of next-generation finance. That is precisely why Ripple repeatedly appears in conversations involving payments, liquidity infrastructure, and enterprise blockchain solutions. As a result, online communities have started pushing the theory that perhaps the next crypto cycle will not simply be another Bitcoin dominance cycle, but rather a utility infrastructure cycle. Now, this is where the psychological aspect becomes extremely important. The greatest fortunes in financial history are usually made by those who identify the next narrative before the majority fully understands it. Bitcoin itself went through exactly the same phase. There was once a time when the world openly mocked Bitcoin while early believers quietly accumulated positions in the background. Today, that same Bitcoin sits at the center of trillion-dollar financial discussions. And according to XRP supporters, the same disbelief phase that once surrounded Bitcoin is now forming around XRP. That is why these increasingly dangerous theories continue trending across social media. Investors are comparing Bitcoin's scarcity narrative with XRP's utility narrative. Some believe the future market may no longer reward only store of value assets, but instead reward blockchain ecosystems capable of providing real-world financial infrastructure. And honestly, this is exactly where market emotion appears to be shifting aggressively. The discussion intensified even further once governments began accelerating crypto regulations. The United States, Europe, and Asia are all racing to define blockchain frameworks, while institutions openly state that once regulatory clarity finally arrives, trillions of dollars in traditional finance capital could enter blockchain ecosystems. This is where the XRP narrative becomes significantly more dangerous, because Ripple has spent years positioning itself directly alongside institutions. Cross-border payments, liquidity corridors, CBDC discussions, tokenization conversations, and enterprise partnerships have all contributed to XRP supporters believing that the market may still be massively underestimating Ripple's long-term vision. Another fascinating development is the increasing focus on compliance and interoperability within institutional discussions. Financial firms appear to prefer blockchain ecosystems capable of aligning with government regulations while also operating efficiently at enterprise scale. That is why projects such as XRP, XLM, HBAR, and Chainlink are receiving increasingly serious attention. The market is beginning to believe that the next crypto cycle may not be driven primarily by meme hype, but instead by financial infrastructure itself. But honestly, the most dangerous factor of all is market emotion, because markets react to expectations long before they react to confirmed facts. And right now, expectations are changing very quickly. Bitcoin is still viewed as the king of the market. Investors such as Entity, known celebrity, Michael Saylor, Digital Reserve Asset. However, at the same time, an entirely new institutional layer appears to be quietly forming, where investors are beginning to take utility infrastructure narratives extremely seriously. And that is precisely why theories like Sell BTC XRP1 continue going viral. Of course, reality checks remain equally important. There is currently no official evidence suggesting that XRP will replace Bitcoin or move into Bitcoin's exact valuation territory. Many analysts still consider such theories unrealistic when analyzing market capitalization mathematics. However, crypto market history has repeatedly proven that narratives which initially appear impossible can sometimes become the fastest-growing narratives of all, especially when regulations, institutions, and technology adoption all begin aligning in the same direction. Another massive factor driving this conversation is the future of tokenization itself. Financial experts increasingly predict that bonds, securities, funds, real estate, and numerous traditional assets may eventually move onto blockchain rails over the coming years. And if trillions of dollars worth of assets eventually operate through tokenized systems, then, naturally, the importance of liquidity infrastructure providers could increase dramatically. That is exactly why Ripple and XRP continue appearing repeatedly in conversations surrounding the future of finance. Honestly, this is the primary reason why confidence inside the XRP community continues building so aggressively. Believers feel that the world still views XRP as nothing more than an ordinary altcoin, while, behind the scenes, institutional finance quietly moves toward blockchain infrastructure systems. Cross-border payment systems, tokenization discussions, CBDC conversations, liquidity infrastructure, and evolving regulatory frameworks continue keeping Ripple highly relevant within future finance narratives. So ultimately, the biggest question is no longer whether crypto survives. The real question is which ecosystem will ultimately hold the strongest position inside the future financial system itself. Will Bitcoin continue dominating as digital gold, or will utility-based blockchain ecosystems eventually become the backbone of global finance? Because history repeatedly proves that whenever financial systems transform, entirely new winners emerge, and those who position themselves early are usually the ones who benefit the most. Thank you all for watching. If you enjoyed this breakdown and you want more professional updates on XRP, institutional adoption, blockchain finance, tokenization, and the future of digital assets, make sure you subscribe, turn on notifications, and stay connected, because the next few years could completely reshape the global financial system. And honestly, the biggest market moves usually happen long before the majority realizes what is changing behind the scenes. The real question now is not whether crypto survives. The real question is which assets institutions will ultimately trust when the future financial infrastructure is fully built. I truly appreciate your support, and I'll see you in the next one.